Stop thinking more members, growing without expanding. Welcome back to NAFGU's podcast. I am your host, Grant Sheehan, CEO, and today we're diving into a challenge that a lot of single-sponsor credit unions, especially firefighter and other credit unions, primarily serving first responders, are quietly wrestling with. How do you grow without expanding your field of membership? I have been hearing that question for over 20 years. Because let's be honest, changing the field of membership isn't always desirable. It can dilute your identity, can create operational complexities, and in some cases face internal resistance. So the real question becomes, can you grow meaningful without adding new member groups? The answer is yes, but it requires a different mindset from both the board and management. So let's start by rethinking growth. Most institutions default to thinking growth equals more members. But for firefighter and other credit unions primarily serving first responders, the smarter lens is this: growth equals a deeper relationship with the members you already have. Because here's the reality. Many members only use one or two products, maybe a checking account and an auto loan. Meanwhile, big banks and fintechs are capturing everything else: mortgages, credit cards, and investment. So the opportunity isn't just people. It's more products per member and more share of the wallet. That's where real growth lives. Start thinking of the lifestyle advantage of first responders. Firefighter and other credit unions primarily serving first responders have something most financial institutions would kill for: a predictable member lifestyle. Think about it. Academy recruits, first paycheck, equipment purchases, marriage and family, home buying, promotions, and then retirement. This is clearly defined financial journey. But here's the issue. Most credit unions aren't actually building products or strategies around it. Imagine instead financing programs for academy recruits, credit building tools early in their career, mortgage products designed for shift workers, or retirement bridge loans tied to pension timing. When you align your offerings with their life stages, you stop being reactive and start being an essential part of their lives. Then there's that built-in hidden growth engine called families. Here's one of the biggest missed opportunities. You already have access to more members. You're probably not fully activating them: spouses, kids, immediate family. If every first responder household brought even one or two more additional relationships, your growth curve changes dramatically without touching your field of membership. This means trying family onboarding strategies. Make joint members members. Household level incentives. Youth accounts that build long-term loyalty. This is not an expansion, it's an activating of the potential members you already have. Now you want to shoot for deposits and not just loans. Another common issue is many firefighter credit unions and other first responder credit unions are loan heavy and deposit light. That creates constraints. First responders often have irregular income patterns, overtime stipends, and varying shifts. That's not a problem. Think of it as an opportunity. Designed for this, savings tools built for fluctuating income, direct deposit captures campaigns, high yield accounts that reward consistency. When you own the deposits, you unlock substantial growth. Here's another goal: lean into your credit union's identity. Here's where a lot of credit unions make a mistake. They try to act like everyone else. But your strength is not scale, it's identity. First responders trust each other. There's a deep sense of brotherhood and shared experiences. So instead of diluting that, amplify it. First responder only perks, partnerships with gear providers or unions, tiered benefits based on years of service or rank. Make membership feel like part of a profession, not just another bank account. You really don't need new member groups. You need deeper integration with the ones you already have. That means being present at their academies, onboarding every new recruit, embedding into payroll systems, and offering financial wellness tied directly to the departments. If you own the entry point, you increase the conversion and lifetime value to your members. And don't forget that digital access. Even with strong loyalty, convenience still wins. If your mobile experience isn't competitive, your members will still use big banks or fintech apps. So growth also depends on seamless digital onboarding, fast lending decisions, and intuitive mobile banking. Because loyalty gets you in the door, but convenience keeps them there. And your members' data is all around you. And that's finally one of the biggest unlocks. You already know their age, their rank, their years of service, and income patterns. That's a very powerful. Use it to anticipate needs. For example, when a firefighter hits 5 years of service, that's often when a home buying window. That's your moment to engage. Growth becomes proactive and not accidental. So in closing, here's the bottom line. You can grow without changing your field of membership, but it requires a shift from chasing new members to maximizing the value of the ones you already have. It's harder, it takes a lot of discipline, and it requires better execution. But it also leads to stronger, more resilient growth and preserve what makes firefighter and first responder credit unions special in the first place. If you found this helpful, share it with someone in your network who's thinking about growth differently. We want to thank you for following our podcast and keep us in mind at a further time. Stay healthy, be safe, and keep moving forward.